Hey guys, welcome back to my channel. So today I want to make a video on how you can get a 90% win rate when you're day trading. No, there's plenty of reasons why people would want to have a very high win rate, like I don't know, 80%, 90%. I won't say necessarily 100% because in day trading, I really don't think that's even possible. But you can have, despite what people might think, you can have a very high win rate when you're day trading. You just have to understand that you're going to have to manage your risk a different way than you would normally manage it when you're doing regular day trading. And this is a strategy that I've developed throughout the years of trading that has worked really well for me personally. So and this is the thing. Like with this strategy, I personally don't use a stop loss, and I'll go into more detail into how I do this and how I trade it. Um, and I know people would, oh, you don't use a stop loss, you're gambling, you're whatever. Not necessarily. Um, when you know your own strategy and you know how you're trading your strategy, and you have the correct psychology behind it, you don't necessarily have to use a stop loss. The way I manage my risk is I use position sizing. So if I have £1,000 in my account, I will still only use micro lots. So I use 0.01, 0.02s, 0.03s. Some people are like, oh, that's a waste of time. But, whatever. I'm kind of getting ahead of myself here, but I'll just quickly explain exactly what this strategy is, what it entails, and you guys will get more of understanding on how I trade this. Okay, so basically, this strategy is basically you. Let's say I'm on Euro USD at the minute. Say the market's trending up, the market's trending up, right? So what I will normally do in most cases is if I see an uptrend going up like this in the market, usually, believe it or not, this might sound even counterproductive to what you've learned in trading, but what I'll do is I'll just randomly sell a micro lot, a 0.01 here. And the reason for that is because my account size is large enough, my drawdown is really small. So I don't use stop losses. Even although the market technically rallied and rallied and rallied all the way up here, my position stays here. My micro lot stays here. So my 0.1, 0.2 stays there. In fact, in most cases, the more the market rally, I usually just keep adding smaller and smaller sizes to it. Most of the time, you're not going to be in more of a drawdown than £5 or 10 quid if you're using these micro lots. Obviously, also one of the things that you also need when trading the strategy is decent leverage. So if you're coming from the forex side, obviously, which is what I'm on, um, you need to use um, a company that gives you good leverage. The reason for that is because when you trade with a prop not a prop firm, what am I talking about? When you trade with a broker that gives you decent leverage, and that's why I use offshore brokers for this. It's not necessarily, I guess, the safest thing because they could go under and you could lose all your money and all that. But for me, I think the risk is worth it. I could put it into a regulated broker, but you just won't get the same amount of leverage. And the reason why I like leverage whilst trading this is because if I add my micro lot here, my risk drawdown won't be as much. So I'll be like £2 in drawdown because there's like to place a position size, you still need a certain amount of equity in your account. And for me, because larger leverage gives you more room to work with, it's almost like you get more money to play with. Um, so when you place a position, most of your money isn't tied up, so you still have more. There's a lot more you can lose before your account's in danger of liquidizing. But versus when you're not on a regulated broker, that's quite complicated to explain. I guess I'll make another video on this. Um, but yeah, I'll just get back to the strategy. So you keep fading the market more or less. Trading this with a normal trading strategy where you're placing stop losses and you're using really large sizes is one of the worst things that you can possibly do, because the reason for that is if the market is rallying against you and you're adding size against it, you're just going to keep losing money. And at the end of the day, you just never know what's going to happen in the market. So you can't add large sizes here, then fade the market here, then keep fading it here if your size is quite big. So how I do this is I use really small lot sizes. I keep using small lot sizes, and because of the nature of the market, the way the market, rallies in wave, the market never really normally just goes up and then just keeps going up. Normally, what will happen is that the market will go up like this, and then eventually it'll pull back. And so let me just get my drawing tool here, line chart. So let's say I had a 0.01 there, I had another 0.01 there, and let's say my last 0.01 there. So in all, I had like three 0.01s, which is like 0.03s altogether between all these three positions. What will happen is I'll be in drawdown here because the market's moved against me because I'm fading this market. So I'm selling here, I'm selling here, and I'm selling here. Eventually, what happens is that when the market does come back, all I really need, usually with this strategy, is for the market to come halfway for me to break even. And that's important because if the market comes back down to this part, this line right here, more or less, I've not lost any money because the profits from here, the loss from here, and this will just be at break even at that point. So I'll basically be at break even here. So with this, the good thing about this strategy is you can give the market so much more room to move, and it's much more difficult for you to lose money because your size is so small, your room for error is so great, and I kind of compare this with like trading the strategy with like the casinos. It's like you go into the casino and you pay like a small fee to place a bet on a casino. So, for example, let me just get my pen here.
0.00049, 0.05%.
That's the wrong. So you go into the casino and you play say 20 quid to like roll a slot machine, right? In most cases, you're gonna lose that 20 quid. And the reason you're going to lose that 20 quid is because the odds are so stacked against you. There's a thing called the house edge. So because the house have an edge, you're paying a small fee thinking that you can win, say, 2 grand. If you do say you roll a slot and you make the correct move, you can win 2 grand from that. So if you win, you get 2 grand. But if the house wins, they keep your 20 quid. And that's the same with my strategy, um, because you're playing basically you're playing the casino itself. You're the one coming into the market, placing these really small sizes and saying to the market, hey, if you keep on going up, you can take a lot of my money, right? You can take a lot more than I can necessarily make back with my micro lots because I'm in such a big drawdown. But the odds of you doing that is extremely small. So it's very, very likely that the market's going to rally against you and then pull back and either put you at a break even, or in a lot of cases, let me just get rid of that, get my tool, or in a lot of cases, just bring you back down into profit. So that is basically the 90% win rate strategy that I use. It's a very slow strategy. This is not going to get you rich. If you have an account where you want to slowly grow this account over time, this is a good strategy to use. It's really good. It's For me personally, one of the reasons why I use this strategy is I can just, what I even do most of the time. I don't just randomly set trades like I just explained to you, but I'm just showing you the worst case scenario. What I will do is normally I'll set alerts. So if I see the market rallying, I'll just set alerts, see what the market's doing, set more alerts up here, see if the market does come up to this area. If I start seeing a pullback, I'll just sell a micro lot up here. And sometimes you can just even leave your micro lot and see how much profit you can get from that. So even one micro lot here could get you a decent sized profit from there. Obviously, this is just one example. I could show you guys more examples. Let me just get rid of these lines. Um, get rid of that. Get rid of that. Get rid of that. So, and one more thing, you guys, I think a lot of people don't understand when it comes to trading, is it's 99% of the time, not necessarily 99, I'll say 80% of the time, the market is usually in a consolidating like range like this. So you see the market it's not really trending up or down, it's just kind of going sideways. Most of the time, that's what the market does. And that's the sweet spot for this strategy because let me just get my line graph again. let's say, the market's dropping here, it's dropping here, and then it's starting to rally. Let's say you sold here, right? And it's this market still moved up against you some more. You small seller at 0.01, 0.02, 0.03, I'd say max, depending on the size of your account. If you have £1,000 in your account and you have really good leverage, you're on a broker that's giving you 1 to 500 leverage, 0.01, 0.02s, 0.03s, even 0.05s. Right? You're not looking to make thousands like these people online that are making just clicking a trade in a couple of seconds and making thousands. Most people aren't making money when it comes to day trading. If you can find a strategy that's going to put your emotions at ease because your size is so small, your psychology is going to be better. At least for me personally, I'm not really saying you should do this, but losing a small amount of money, not really necessarily, but in a small drawdown. I mean, it's much easier on your psychology. You don't have to play this gambling game. You're gritting your teeth when the market is moving against you. You can just chill, make small gains. Compound your account over time. Sorry, that get rid of that line. Compound your account over time, and you're solid. So the market's moving up against you. Most of the time, as you can see, it comes back down. If you fade it here again, which another thing that I don't normally do is that I don't set many positions close to each other. So obviously, I wouldn't have known if the market's necessarily in consolidation here. So let's say, let me put this to the edge. So I wouldn't necessarily know that the market's gonna chop around, which is a good thing for this strategy, like I said. But if I sold here, I wouldn't necessarily put um, another sell order here. And the reason for that is because I don't want to end up in a situation where I'm just constantly putting too many sell orders as the market move against me. Because then the more the more orders you put place, the larger your position sizing starts to become because you're fading the market consistently. Um, so yeah, so I normally would add positions the wider the market moves against me because that's a higher chance of it coming back down. But obviously, the market did consolidate here, and placing any trade in this area with your small size, you're gonna make profit from it all the way up to say here, right? So that is basically the gist of my 90% win rate strategy. If you want to get a win rate strategy when you're day trading, you have to be realistic. You are not going to get a 90% win rate strategy, 88% win rate strategy from having stop losses and even take profit. Well, maybe not take profits, but from having stop losses, because the whole nature of the market is extremely difficult to predict unless you're some genius. What do they call those people that read the orbs? Them fu- uh, future predictors. I don't know what they're called. Unless you're that, you're not gonna get a 90% win rate strategy with stop losses, with risk to rewards, 1 to 3s, 1 to 5, 1 to 10s. It's just not gonna happen. So I don't trade this strategy with stop loss. That would be so pointless. If you're trading with a stop loss and you're trying to do this, you might as well just trade a normal um, strategy where you're not using micro lots on your account. But then again, you can do whatever you want. But yeah, so that's the essence of this 91 rate strategy. And as you guys can see, the market 99% of the time it moves up and down in ways. Um, so yeah, so for good context, let's just say just you bought something here. Let's say you're just unlucky and you buy here. You buy 0.01 here. And obviously the market's moving all the way down against you and against you and against you and against you and against you. If you just hold on to that trade, all you really necessarily have to do is you buy here, it's pushing down, and you buy down here again. All you have to do is to wait for this thing to come back halfway for you to be at break even. And as you can see, it did came back halfway here. And that's the thing with this strategy, because you're using small sizes, it's very very likely that the market's going to come back to your break even. If you're freaking out and you're saying, "Oh, the market's moving too much against me," it's very very likely for it to come back to your break even. Obviously, not always. Some days the market is just going to chug and chug and chug, and you might say, "Oh, this is not worth it," or it might take you way too much time for it to come back to your break even, and you just close out the trade, and then you lose that money. But yeah. So, anyways, that is it for this video. I'll stop rambling on. Thank you guys so much for watching. It is nice to be back again. I've taken quite a break off making videos, but it is nice to be back. But anyways, I'll see you guys again next time. Bye bye.